Having been certain that we are all here, welcome to this series of the Daily Morning Market Call. Um, it has been quite an interesting weekend, and we are going to be looking at market forces, both geopolitical activities and economic data that has been making attempts to change market direction. And then from there, we are going to move to the charts to see the play out. Now, this is going to be a pre-recorded YouTube video to mean you could find it on our YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you are not left out in future content that we produce from time to time in attempts to bridge the educational gap so as to facilitate our financial journeys. Having said that, from an economic point of view, the highlights which happened during the weekend and late last week, which are seeming to move the market. Number one, we had positive PMI data from Europe and United Kingdom, and PMI2 is an inflation data point, an inflation indicator. In full is the purchasing managers indexed. It is an indicator of prevailing direction of economic trends in the manufacturing and services sector, where the leaders of the different sectors of the economy, that is manufacturing and service sector, be it tech, be it agriculture, leaders in the Silicon Valley, they give their perspective on where they see the economy going. Now, if it is positive, it boosts the power of that particular currency, which in turn we interpret it on the charts. So we see good PMI data coming from United Kingdom that will affect the Great British Pound, and coming from the Eurozone that will affect the Euro. Now, on top of that, we also see a little bit of geopolitics. We see the new 47th president of the United States, Donald Trump, putting pressure on OPEC countries. OPEC countries are countries which produce petroleum and energies, to lower the prices of that particular commodity, oil, so as to reduce the income of Russia as a state, as an aggressive state against Ukraine, so as to lower the chances of escalating tension. So that will have an effect on oil. We are going to be looking at that. On top of that, we also see a little bit more on the geopolitical side, where we see the famous double T, that is Trump's tariff, causing market tension, and market tension, which induces fear, would have an impact more on gold and other precious metal, with our focus on gold, where we are going to see this fear causing market to be in a bullish trend. On top of that, we see also escalating tension in the Middle East. Not Middle East, sorry, I beg your pardon. Escalating tension in Eastern Europe, where we see President Vladimir Putin adding on to his intention of encroaching into Ukraine at a faster rate, so as to achieve what the Russian state terms as national security. We also see a retaliation of countries in Western Europe to try and defend Ukraine, because the assumption is after Ukraine is conquered, Russia would want to also conquer other countries from Eastern to Western Europe. So they have to abide by their ally Ukraine and try to facilitate. We see the entry of countries in that part of the world in the war front. This also causes much tension, giving gold a much more bullish perspective in rising demand, as investors and traders go to gold as a safe haven to cover their risks. We will also get to observe the entry of DeepSeek. Now, DeepSeek is an AI company from China, which induced liquidity into the market during the weekend. This is going to have an effect on stocks, both individual stocks and group of indices, where we see more downloads from that particular software surpassing the Apple downloads, and this causes market shift in dynamics. We're going to be looking at that with our focus on US 500. Now, that also brings to the attention that the paid version of the ChatGPT, which is a tech instrument in Silicon Valley, has been challenged by the entry of this particular Chinese company in the stock world. So, a little bit of tussle between Chinese stocks or the Asian stocks, if you may like, with the United States, and that would give us a pivot at a meeting point involving these two kind of stocks from these two different parts of the world in US 500. We're going to be looking into that now on the chart. Nice. Beginning with gold. From the daily time frame, we can see that we are clearly on an uptrend that resulted from the 23% increase from the year 2024 as we walk into 2025. What are the market expectations? The trend would continue to be bullish as long as the US dollar is challenged in its strength in the global markets, which is pretty unlikely in the Q1, that is the first 3 months of this year, with the entry of a new administration that is keen in pushing the United States interest first and not policing the international world. So, secondly, with more tensions coming into the world, this would of course cause gold to be in an upward trajectory because of fear being induced in the market, causing tensions, and these tensions would escalate to make investors and traders look for a safer haven, and gold has provided that umbrella over the past 5,000 years. Let's go to our time frame to see exactly how this is playing out. So we see price testing the key level at 27.77, surpassing the all-time high. If we go to a lower time frame, we'll be able to see it much more, challenging the all-time high at 27.70. Now, we see a retest, and if you go to a lower time frame like the 4-hour, and we go closer to what the charts are doing right now, we see that retest and price creating a correction as we attempt to keep challenging the high. And to have a closer view on the daily time frame, would want to see price coming and closing above this particular key level, taking out the all-time high that was created late last year to confirm the overall bullish bias. On oil, now on oil as a commodity, due to the involvement of the new US administration in the supply and demand of oil in the global markets, we see the new administration of the 47th President Donald Trump urging OPEC countries to reduce the prices of oil in an attempt to reduce the income of Russia. Now, to give a quick snippet story about the movement of oil in context of the current times, Russia being involved in war with Ukraine is said to have taken long. Remember that Russia went into this war saying it's going to take a week or 3. Now, from this year, February, we would have taken up more than 3 years into these particular escalations. Now, the new administration is challenging this phase by saying reduce the income that Russia is getting, and the income that Russia is getting is coming from oil. How do you reduce it? Other countries which are producing oil reduce the prices of oil, which will reduce the amount of money Russia makes from exporting oil to other parts of the world. If this is done, the general demand of oil will reduce. Then Russia will not have surplus income to keep funding the war. This was an attempt that was made by the previous administration of Joe Biden, and successfully, where we saw Joe Biden visiting UOE and trying to have talks to reduce this price. Now, Trump is destined to do it, and is destined to do it quick. Remember, during campaigns, he promised he's going to handle that particular war quite quickly, where he has termed it to be a fruitless war. On the other side, the Russian state would argue it is out. The war is because of national security concerns, because of NATO, which is the largest global military alliance, coming closer to its border, which is against pacts that were signed late after the Cold War in the 1990s. So all this escalation, but the point is the demand of oil is decreasing, and right now it is trading at $74.16 per barrel. Would want to see it printing price to the lower side and possibly closing below the 71.54, to mean as long as these stocks will continue, the demand of oil will reduce drastically, which would give investors and us retail traders an opportunity to jump in for the sales. Going off to stocks, this is US 30, US 500, very nice. So going off to stocks, China DeepSeek's app, which was launched during the weekend, seemed to have overtaken the iPhone downloads, sparking a surge of Asian stocks. What does this mean? This would mean that the Asian stocks are on the rise as DeepSeek's record-breaking download fuel investors' optimism. Meanwhile, in the United States indices, we see mixed reaction, with the tech stocks gaining ground and commodities having an alternative stance. The Chinese tech sector is making waves, with DeepSeek outpacing the iPhone downloads, with the signal strong demand for Chinese innovation would shift global market dynamics in favor of Asian films. Now, in correlation to that, this is the US 500, which is an indices, which would mean a group of stocks in and out of the United States. 500 companies in total. Now we see today has begun with a huge spike to the downside, bearish because of the impulse that was injected by that particular Chinese company called Deep Stock. This trend would monitor it much more closely as we walk into New York session to see the market take out the lows to confirm this particular bias. Let me go closer. Would want to see price continue taking out the lows to keep encouraging us to get for the short-term sales, but this would mainly be much conducive for scalpers and day traders, because overall we know that if we go to a higher time frame like the weekly, we know that we're in a very clear bullish trend, which would mean we would want to remain with that bias. But because of the impulse of this news, we would want to monitor it day by day, having in mind that the US 500 is in an overall bullish bias, which is likely going to be the case with the famous double T, Trump's tariffs, which is going to encourage people to invest much more in stocks, with emphasis to the United States stocks. Off to currencies. GBP USD daily time frame. Now we see price attempting to reach the area of interest at 1.24820. This is because of the positive PMI data which came out from Britain. or United Kingdom, if you may like, which would cause price to come from the overall downward trends to attempting to create a new trend to the upside. Now, having in mind the overall trend is a bearish trend, and moving with the new dynamics which are giving us indications of a stronger UK economy as compared to the United States, investors and traders would be cautious in application of trade management as we take advantage of this new context. And if I would go to a lower time frame, the 1 hour preferably, go closer, lower time frame, for day traders and scalpers, we would want to see the highs to keep being taken out to suggest that we are in a continuous bullish trend. But overall, for swing traders and position traders, we know that the overall trend is bearish. Now, before I go to Euro USD to demonstrate the same, I would like it to bring to your attention that on the 29th of this month, that is going to be on Wednesday, we are going to have the Feds, which is the Central Bank of the United States, giving indications on the interest rates in the United States, where we possibly expect an interest rate cut. Now, remember, we have seen the administration of Donald Trump putting pressure on the Feds to cut rates. At the back of our mind, we know that they do not have direct influence, but they would possibly have foreseen interest rate cuts. This would give us a much more medium and long-term trend to continue getting for the opportunities they are in. Having said that, checking Euro USD, we see it's behaving in a similar manner on the daily time frame, challenging the highs, and the price wants to keep printing to the upside because of the positive PMI data which came out from that part of the world. For scalpers and day traders who would take advantage of this short-term trend challenging in the long-term downtrend, but for swing traders and position traders, they would want to wait for price to get to key levels for them to continue benefiting from the trend and making possible profits. Now, as a disclaimer, this is by not any chance meant for financial advice. This is purely for educational purposes. Kindly do your due diligence and, most importantly, observe risk management. As a call to action, if this is your first time, or possibly you have been familiar with the financial markets but you would want to get to understand more of market dynamics so as to take advantage of the various opportunities presented therein, kindly visit hfm.com, or alternatively visit your financial market mentor who has led you to these links to join this chat room for them to guide you on how to proceed therein. So see you guys tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. Until then, God bless.